ESG, and social capital. Please join me in welcoming our esteemed panelists onto the stage. Her Excellency, Dr. Shaikha Maskari, Chairperson, Maskari Holding. Khalid Hussan, CEO, Tadawul. Valerie Haertel, Global Head of Investor Relations, BNY Mellon. And Sammy Kayello, Chairman and CEO, Morgan Stanley MENA region. And our moderator for this panel discussion is Alissa Amico, Managing Director, Govern Economic and Corporate Governance Center.
Good afternoon, ladies and gentlemen. I know it's a challenge and a tall order to moderate the last panel of our discussion today, and I'm delighted to have been invited by the Pearl Initiative and Saudi Aramco to contribute to this fascinating conversation. I think we've dealt with a number of topics over the last few hours, and the last panel of our discussion will be focusing on particular on capital markets, in particular governance challenges and opportunities that we see in the capital markets. We have with us, I think, a very diverse and a fascinating panel. We're fortunate to have the head of Tadawul, Khalid Hussan, representative of BNY Mellon, head of investor relations, Valerie, the chairman and CEO of Morgan Stanley Middle East, Sammy, and Her Excellency Shaikha Maskari, who's the chairperson of Maskari Holdings. So given that we have only about 45 minutes, I think I will jump right into the substance of what we will be discussing. And I think the objective here is to talk about what we can do to improve governance of listed companies. And since I'm the closest to the microphone, I'll take the prerogative to say a few words about a bit the history of where corporate governance has evolved. We talked a lot over the last panel about the future of governance, artificial intelligence, but I think it's also important to talk about the history because ultimately lessons are learned from the history. And there I would like to say that over the last 12 years or so, we've seen an enormous evolution of corporate governance in the Gulf region and in Saudi. And since 2006, when we had a meltdown in the capital markets all over this region, and the regulators have stepped in to clean up the markets to reduce the amount of insider trading and market manipulation, and a lot has been accomplished since then with a view to protect some of the shareholders. And I think it bears to say here that most of the markets here in the Gulf region, including here in Saudi, are retail markets. And over the last few years, as you know, a lot has been accomplished by the Capital Market Authority here in terms of the revision of the corporate governance regulations, last of which was only happened only last year, which has aligned the corporate law of Saudi Arabia with the listing rules and introduced a number of international provisions bearing on corporate governance, for instance, rendering most of the boards of listed companies non-executive independent, introducing board evaluations, further regulating conflicts of interest, and other very important aspects of governance in the kingdom. But I think that it would be fair to say that most of the corporate governance evolutions or improvements we have seen in listed companies here in Saudi, but also in other countries of the region, have been driven by the regulators. And with that in mind, I wonder if I can turn to you, Khalid, and ask you to take us and say a few words about how you see the latest revisions of the corporate governance rules and regulations in Saudi for listed companies impacting the behavior of market participants.
Sure. Thank you, Alissa. Masakum al-khair. Good afternoon. I just want to correct a conceptual principle about the Saudi market that you have mentioned. It's a retail market. Actually, 90% of the Saudi market cap is owned by institutional alike. investors. However, 90% of the liquidity is driven by retail or individual alike behavior investors. So back to the subject, I want to start with the principle of to ensure a good corporate governance practice. It's a collaboration between all stakeholders in the process in order of seeking a long-term economical as well as social value creation. From the perspective of the exchange, in conjunction with the regulators, of course, I see the role of the exchange fall in two folds, basically, by putting in place an effective operational as well as regulatory framework that helps all market participants to adapt to as a guidelines for them. And the second fold of that is basically the monitoring and supporting of the enforcement of compliance by market participants. Of course, this is a continuous effort by any exchange in the world. They have to adapt to new regulations, to new practices, in order to make their venue or platform a competitive platform for international investors, local investors, international listing corporates, as well as international corporates at the same time. And I want to say also that the role of the exchange or exchanges overall, they have to always to be or play an educational source for such evolvements of the capital market developments. As a stage of, as the development stage of any exchange in the world, they go from a position to another. I'll talk about the Saudi Stock Exchange. As an emerging market today, we aim to go and achieve a developed market status. And by doing that, we have to adopt international familiar practices by investors, issuer, market participants. We have been for a long time a closed exchange, and I would say the whole region has been for a while a closed region for international investors, international issuers participation, and the case is not anymore. Yes, in the region, the Saudi Stock Exchange in particular, I would say it's the last player that comes to the map of the international worlds by integrating themselves. But I would say we are in a very fast mood of that integration. Several changes has been taken place. And going back to my initial statement about this collaboration between all stakeholders in the process, that means the exchange has to drive how they elevate their standards with the regulators and the capital markets. Listed companies understand how corporate governance contributes to their attractiveness, to their continuation, to their growth. If we look at, for example, ESG indices, comparing them with the performance of exchanges indices, they always in the last 10, 11 years have outperformed the market indices. And all of that give you, or give us a good feel of how applying these practices by Saudi corporates, especially listed in the capital market, help the whole ecosystem to grow further. And we have worked in the past to elevate the standards of Saudi corporates, at least listed in our platform. IFRS standards, e-voting for shareholders practice. CMA last year have passed or adopted the new corporate governance rules, which is basically helps enhance the rights for shareholders, in particular the minority shareholders, the rights for independence or enhancing the independence board members' practices. All of these practices will just make your company, your exchange or capital market, as well as your economy, an attractive platform for all type of investors, whether they're local or international.
Sure. If I may follow up, I think there are a lot of quite interesting points that you're raising. If I may follow up with the particular role of the Tadawul as an exchange, because there have been quite a number of conversations about what Tadawul will be doing going forward in terms of regulating or overseeing corporate governance of listed companies. And indeed, there are different models all over the world. In some countries, it is the stock exchange. In the US, for instance, it is the stock exchange that sets most of the corporate governance rules and their listing rules. In the Gulf region, here in Saudi, it's been mostly the securities regulator, the CMA, that has set most of the requirements bearing on listed companies, and Tadawul has played more of a role of monitoring trading and perhaps being involved in some of the supervision from a more market point of view. Will that be changing? Is this an area that you see evolving going forward?
As I said, Alissa, basically, this is an evolving process. You have always to keep an eye on the developments of the standards you apply, because that's basically based on competition that you do as an exchange or a capital market with the rest of the capital markets. Continuing to reviewing your standards. And when I say reviewing and standards, doing it the right way, not the traditional way. Not doing the regulations or the governance process in silos away from your stakeholders. You have always to engage investors, issuers, market participants on what exactly the expectation of the standards they're seeking in order to make your platform an attractive platform. Based on that, the corporate governance rules has been issued last year. The IFRS standards have been applied January 2017 for all listed companies, always updating the disclosure requirements and the listing rules in the exchange. We're working with the Capital Market Authority as we speak to enhance the investor relation, which is basically the gate for accessing, for investors to access corporate information and get comfortable about their investments. So all of that is underway, and we continue to seek, as I said in the beginning, a more developed status for the Saudi capital market, and without being always close to the standards and expectation of our clients, you can't achieve such an important milestone.
Khalid, it's interesting because you mentioned, of course, and I think we have to... we know that the CMA has also, in addition to introducing rigorous corporate governance rules for listed companies, has also evolved on a number of occasions the requirements, the QFI, the requirements for foreign investor participation in listed companies here in Saudi, which used to be, and it still remains quite small, I think less than 5%, if I'm not mistaken, today. But there are certain ambitions in this regard to open, and indeed one of the reasons I think today for the regulators to continue evolving governance is to, with a view to align the governance regulations and also behavior of the listed companies to the expectations of foreign investors. And indeed that goes with the inclusion of Saudi in the indices. And I want to ask our panel, and perhaps turn to Sammy and Valerie also, from your perspective, what would it take to get foreign institutional investors more active in the region, not only through passive flows, when Saudi Arabia gets included in emerging market or classified as an emerging market, but what would it take to get active institutional money here in the kingdom? So may I turn to Sammy and then perhaps to Valerie on that?
Sure, thank you. I wish I knew. We work steadily with the international investor community to make the case, the investment case for Saudi, and it's frankly, it's not a challenging case to make. There's a lot of potential in Saudi. The utilization rate of the return that's available in Saudi hasn't been captured fully. Yes, the uptake is 5% or so, but there are many things that are in the pipeline. If they do materialize, then that number and percentage of participation from the global community will increase by manyfold. Now, generally, what the investors are looking for initially are just fundamental things. Governance is one pillar of them, a very important one. They're also looking for safe havens investors typically are motivated by total return. Total return calculation is a very simple mathematical calculation. It's your investment today versus what you take out in the future and the cash flow in between. If you have any doubt about the cash flow in between or getting the money in the future, then that return paradigm is challenged. And as long as you can secure that paradigm and assure investors that their investment can come back and the total return versus other opportunities around the world is challenging, is attractive, then you have your case is made for you. It's pretty simple. So here for Saudi, I think the work that the CMA, Tadawul, and a couple of the companies or a handful of the companies, government and otherwise, that have been doing with the financial community and the investors in the world at large over the last 3 to 4 years has really paid a lot of dividends. They've been very open to understand what motivates them, what concerns them, what it is that gets them from A to B, and have been moving towards trying to adopt, trying to sort of put in the regulatory code these measures that will tick the box for them. There's a lot of money that's floating around the world. Pension money, insurance money, savings money, and returns are low. There's a lot of geopolitical risk around the world, and investors are okay investing in high geopolitical risk areas. They'll put a price on it, and if they feel that they're compensated for that risk, then they can go beyond that hurdle and start to focus on other things. So companies that have robust relationships between management and the board that are accessible and open to their shareholders, managements of companies that demonstrate to shareholders that they are worthy custodians of the capital that they're going to take, they're going to use it wisely, generate a very attractive return for them over the long term, not the short term, are companies that will succeed in attracting money and will outperform. And boards that are diverse, that are on the main independent, representative, experienced, that help the management in setting the corporate strategy, the capital allocation, incentivize good behavior, companies that are meritocratic, that have succession plans, that have good risk frameworks, that incorporate whether it's legal risk, operational risk, cybersecurity risk, are companies that will win. And that, for us, is something that we see here and very optimistic about, and I think we will succeed in getting investors to join this market.
Thank you, Sammy, for that positive perspective. If I may follow up with a question, going back to the numbers that Khalid cited, the 1990, that I think it's a critical number to understand the nature of the Saudi market. 90% of the market is owned by institutional investors, and we did a study, which is relatively recent, about a year ago, looking at the composition of institutional investment around the Arab world. And here in Saudi, I think that the number that I retained is about 45% of the market here it's sovereign, if you ultimately classify the PPA and the GOZI and other pockets of sovereign money. I wonder if you have thoughts as to what kind of responsibilities do the large sovereign investors here in the region have in terms of improving corporate governance, because ultimately these investors are, in my view at least, best equipped to understand the local challenges, the local culture, the particularities and the dynamics of the companies, the risk, sovereign and other. Should sovereign investors here in the region play a leading role in trying to improve corporate governance standards of listed companies, and to what extent their expectations are aligned with local investors?
Well, I'll say I'll talk about investors a little bit more broadly, but certainly the sovereign wealth funds, given their stature and influence, will play an important role in interacting with the companies in which they're invested in order to promote good governance practices. And that's from starting at the board level, and some of the things that we heard with respect to having a independent board, having a board that is diverse. And what's interesting about diversity is it's come a long way in a very short time globally. And on that note, the reason why is it makes sense, it's good business, and it's also makes a difference financially. So when investors take a look at companies and they will look for signs that the company is forward-thinking and has the right composition on the board to bring fresh ideas in terms of, look at backgrounds and skill sets and geography, where the individuals are from, ethnicity, and all of that brings a lot of rich perspective to the conversations at the board level, and investors are looking for that, and investors themselves have diverse investment professionals, and so when they're sitting across the table from a company, they want to see that they have similar values. And from a leadership perspective, having a core set of values, and we heard how important that is today, and I think that companies need to have a strong moral compass that resonates globally, and it resonates with younger generations who are looking for more than just financial performance when they're looking at companies for investing. Sovereign wealth funds are looking for the right values in the companies that they're invested in, because companies that are concerned with their environment, they're concerned with all the issues regarding all the social issues, as well as performance in combination, are the ones that are going to be able to thrive and survive and compete most effectively, over a long period of time. And so you've seen in the marketplace a shift from shorter-term thinking to longer-term time horizons. Investors are pushing that, and there's more of a movement now, because in the U.S. we report quarterly. In Europe it's semi-annually. And so investment managers incented to return, quarter after quarter. Companies had become somewhat short-term in nature. The pendulum is shifting to really be focused on the long term. And so in what I do, I see investors asking more and more about us and what we do from a socially responsible investing arena, and they're asking about the board diversity and leadership as well. So more and more that's happening, and I think it's very important to be focused on it.
Thank you so much for that. I actually would like to come back to one word that you mentioned, and because it's something that unless I missed while I was running out of the room, I didn't hear much discussion on today, is diversity. And I think here in Saudi there has been quite a bit of progress made in terms of bringing international board members. We've heard Aramco obviously has I think three international board members. A number of leading listed companies have diversified their boards. Less so from a gender perspective, because in the Gulf region that still stands at around 2%. I don't know if I may put you on the spot and ask you what your thoughts as to, from the global experience, what are some of the lessons learned that might be relevant to this region in order to improve diversity of boards in this region? Because as you probably know, there's been quite a bit of debate about whether you need quotas, or whether it will be a natural evolution that from board evaluations, and as companies mature and their leadership matures, that will sort of come naturally. Do you have thoughts or views on that to share with the audience?
Sure, absolutely. BNY Mellon is the largest asset servicer with 33.5 trillion in assets, but we also have a large asset manager with 1.9 trillion of assets under management. And one of our boutiques, Newton, was a founding member of the 30% Club, which was a movement to have companies focused on having at least 30% of their boards women.
And they have operations here as well.
Yes, yes. And so we're very proud of that. Now, BNY Mellon didn't always have as diverse a board as it has today. And so we have, over several hundred years of our history, become very enlightened by, the changes in the marketplace and what's necessary to compete most effectively and what helps to drive financial performance. And so for us, we recently added 3 women to our board. We didn't have the type of diversity that our shareholders were looking for, and so each and every year we reach out to our shareholders to discuss governance, and this is outside of the regular proxy season for annual general meeting, and also ahead of the meeting itself, and engaging with the investors, really trying to understand what's most important to them. So that was something that we heard and we knew was important, but we also knew it was the right thing to do for us from a value perspective. And so we were able to then diversify, our board in that way, as well as, with the right skills, and the right composition in every way possible. So I think that, over the years, you watch the trends. You understand what's good business, and quite frankly, those companies that have women on boards and women in executive positions and in leadership do perform better over the long term. And so while it may be a low percentage ownership, I think you mentioned 2% today, what the companies here have an opportunity to do is to learn from what others around the globe have done when they've opened up their markets. There are many other markets to look to, and I think it's tremendous opportunity ahead for this market with so many wonderful good practices to learn from and to put this thinking in place. And it takes a long time to transform, but I think it's very achievable.
And may I ask you, so beyond diversity, obviously you're heading up investor relations and you're getting a number of queries on all kinds of fronts. And so we've addressed by diversity, but what are the priority areas that you would like to highlight here for Saudi companies to consider as they're looking to be international, as they're looking to be dual listed in other markets? What are the kind of questions that you think they might be getting should they list on the LSE or New York Stock Exchange or Hong Kong or elsewhere that perhaps they're not getting today?
Sure. So I think that, first and foremost, if you're playing on the global stage, it's important to be focused on all the governance, issues. I think that they'll be asked about the leadership of the organization. They'll be asked about what the company is doing with respect to climate change. That was one of the top 2 topics actually that came up in this past proxy season for U.S. companies. And so to the extent that you're in industries that affect the environment, they'll be wondering what you're doing as an organization to protect and preserve the future for younger generations. And so I think that will be, a line of questioning that one might get. The composition of the board in other ways, right, the skills that are on the board are also incredibly important, and also a global mindset. Are there experts on the board who understand the global marketplace at large? So it's important to understand the regional markets, but also then to understand the global marketplace. And so there'll be questions related to where the company is today and how the company stacks up against their close peers within their industry. So investors will look at a company in that way. So they'll look at where is the company in its evolution and progress, and where does it stand against its closest peers. And then beyond that, in terms of best practice, they'll look at and ask questions about larger, more established global companies, and the companies will be held to that standard as well over time. Of course, not in the beginning, but I think there'll be a lot of questions about how the company is thinking in terms of strategy, the structure that's in place. Communication is clearly something that we haven't talked a lot about at this conference, but how you communicate to your investors, connect with your investors is really important. Investors are expecting honesty and transparency, and being able to have enough information about you in order to provide the appropriate valuation and to be able to compare a company against others, as I mentioned, in the industry. So those understanding your industry inside and out and being able to converse about that and your differentiating factors and what makes you unique as a company is part of what investors are always looking for. So what is that makes your company special and different from others? And those are the things that a company would be smart to understand, be able to clearly communicate, and make sure that information is readily accessible and understandable and available in all forms on the website, in filings, and making sure that there's a regular process for gathering feedback from the investment community and digesting that and then doing something with it.
Absolutely. I think that if I would speak, if the CMA was here, they would probably say that they, I mean, the good news is that the latest governance regulations that were issued for listed companies it actually has a very detailed requirements about board of directors report, what kind of corporate governance companies should report on beyond sort of the very superficial participation or names of board members and the basics, sort of the 101 of corporate governance, much more detailed requirements on that. And it probably, if I guess Khalid's thoughts on that he would say that XBRL has also been introduced to allow this sort of benchmarking that you were talking about on the financial performance of the companies. But I don't know if Khalid, would you like to, is there anything else that I might have missed on the...
No, I mean, this is how it should be from our perspective. I mean, looking at the capital market from Vision 2030 point of view of opening up the market and integrating it with the rest of the world, you have to take that back. Yes, some of the changes will be tough, difficult, but if it's accompanied with the right process of educating people, the right timing of implementation, advancement, it will happen. People are not used to change, but the whole world is changing. So we have to catch up, and we have a lot to do, and we're going that path.
Okay. Well, if I may turn, just in the interest of time, last but not least, to Shaikha Maskari. I know that you have enormous experience working here in the region, working with foreign investors, and I wonder if you can comment from your perspective, what does it take to bring foreign investors here in the region?
I think we have to go back to the roots, and it's part of my age-related. We talk of corporate governance and the importance of governance. Governance, essentially, is the human values, the personal values, the corporate values of the shareholders, the management values, and it becomes also identified with our countries and our cities. Even between us and Dubai, my hometown is Abu Dhabi, we have our different values, our different reputation. And a good example of how governance is a catalyst of growth and attracting foreign investments, particularly foreign investors. There are several types of foreign investors. You can have the foreign investors are simply prospectors, but actually to attract sovereign linked investment from the state funds, pension funds, and all that, that gives credibility to our stand. Good governance is not a monopoly of the Western world and Western banking and institutional organizations, although international public opinion would, preconceive that. But we have seen what good governance has done to places like Singapore. It is in the middle, this little poor island in the middle of Asia with all that. And good governance attracted it because it was unquestionable. Foreign investment infrastructure, and everything else. So when we think it's just not coming from the how corporations, most of the corporations and financial institutions started as family-owned organizations, or the big banks, and then they went public. Going public, they also had the family values with that institutions. And I'm very pleased to see the trend recently of our family offices, family organizations going private and successfully. But more interesting to me is our national oil companies starting to go private. That attracted the whole world. Why? Because unsaid and even unthought of, the best governance we have enjoyed is in the oil companies. We have ADNOC in Abu Dhabi. ADNOC from the beginning right to the top is all corporate governance. Aramco, the same thing, is the culture of the corporation. Nobody questions. These are huge financial institutions, hands-on operational institutions. What are the values? The value is management, is actually good management, is corporate boards, the credible corporate boards, and the human factor. When we speak about the financial markets, sometimes we don't reflect on the human factor. The reputation of any organization depends on the ethics of that company, integrity of that company or that organization, and the human consideration. Once you have that, you have what it takes to have investor confidence and actually the reputation of the companies. Okay, and having family holdings now coming into the stock market is a great development. But to me, in my hometown, the development of the Abu Dhabi general market. In Abu Dhabi, we were relaxed. When I was a child, I was just simply told, we have hydrocarbon resources that would last us over 150 years. We don't have anything to do. The oil will flow. However, we had to move with the time. But we moved with the time. Our social values, our personal family values, our tribal traditions and values, which defined our social values, translated into the way of living, then grew into the modern good governance. And we have the good governance now in that. And for me to attract, actually, my interest in the fantastic, successful launch of ADGM, Abu Dhabi Global Market, very interesting, because it certainly has the focus, the world eye, on a nation that was identified with oil and gas production. All sovereign, sovereign, sovereign. Suddenly, we are going into public. But from my experience, I thought, how do we contribute to this, to what I would like to have our stock market do? Is that we used our family relationships to spread the word and to attract sovereign state funds.
But you mentioned
to come and invest in the Abu Dhabi capital market. Why? That investment will, number one, convince the rest, because they have their own corporate benchmark, to convince the rest of the world, this place is now in business. Number two, it is for social economic development. It's not going in somebody's pockets. So that's a social growth for the, also not only for Abu Dhabi of United Emirates, is for the MENA.
True.
And alhamdulillah, we managed to attract the Alaska State Pension Funds, permanent pension fund. And that it's the jewel in the crown to bring them to Abu Dhabi, partnered with them to establish an Abu Dhabi global market. And McKinley Capital, is 25 years old Alaskan money managers to come and manage it. With that, we know the brand of Abu Dhabi capital market, we have laid our standards.
Absolutely. May I ask you, there's just an interesting point that you were highlighting, and I think the word that I retain most is perhaps investor confidence. And there are, I mean, if we look at corporate governance, and I think this was a leitmotif of what we've been discussing so far, is that in the region, it's been mostly advanced through regulatory action by the regulators, so the CMAs, and a little bit also by exchanges. And I wondered to what extent, our panel feels that there is a time, or right now is a good time, to introduce some stewardship responsibilities on institutional investors, whether it's local or foreign. I wonder if Khalid or any of the panel wants to comment on that before we turn the floor to the audience to ask some questions of our panelists. So the question is basically, should we ask of the institutional investors, should we introduce a stewardship code like in the UK, like in Malaysia, like in other markets, and say, you guys need to have a voting policy, you need to disclose how you vote. Is it the right time for such an action?
If you allow me, I think the way I see this, regulators and exchanges has to set the floor of basic standards that needs to start to pick up in any of the capital markets. And shareholders has to be more active, especially in this region. When you talk about institutional investors, sovereign funds, sovereign investors, investing in a company by looking at or assessing the financial outlook of that company is one element. But looking at how the company manage its risks through environmental and social as well as governance perspective is actually what create the long-term value chain for these investors. Exchanges and regulator could help, but as Her Excellency mentioned, it's a mindset that investors need to have within themselves. Issuers have to have in themselves. It's easy for regulators to set stringent rules for disclosure, for corporate governance, and markets has to adapt to it, whether they are exchanges or listed companies or investors. But if it's not in the mindset of the leadership, the shareholders of these companies, we would never achieve the purpose of that. Some companies today look at investors as people who own their shares, and they have duties to them, that's all. And many other companies look at the shareholders today, or investors, as a fact they are the source of financing for them. They are the first channel for them to go to whenever they need financing to finance their growth in the future. And you would find it very easy for companies all over the world to raise as much capital as they want whenever they have the right disclosure and governance set up, because their customers or their investors are very much comfortable with their. So to your questions, enforcements to the investors themselves to act, I would agree and disagree. They have to be more active shareholders in the marketplace. And the regulators and the exchanges, they have to apply at least the minimum required standard and protections as far as they require.
Okay, thank you so much, Khalid, for that. I think in the interest of time, I'm told that we have to wrap up relatively soon, but I would like to maybe ask if there are any burning questions from the floor, please, microphone to the front. Or if you can speak louder, loud enough. Not.
Assalamu alaikum. Muhammad Abu Dawood. I just I heard some comments about gender. In Europe, certain markets, if you're a listed company, it's mandatory to have a certain percentage of women on the board. Yes. Germany, for example. Some are optional and some are mandatory. I know that for this conference here or forum, what are we going to do to ensure that we develop women to get involved in boards and in governance? The bigger question is not that. Actually, throughout the conference, I was disappointed to a certain extent that I found that there is a lot of ignorance about governance, and there is a big mix-up between governance and the other, let me say, call it compliance, audit, risk. These are different regulatory issues that have nothing to do with governance. And I think this just came to the conclusion that there is more work that needs to be done on the subject of governance than I thought. On gender, I'd like to compliment Aramco that they do have a department that handles the gender issue, and I met with them. Thank you.
Thank you so much. I think we'll take perhaps one more question from the audience. Please, at the back, if you can get the microphone.
Assalamu alaikum. Abdurrahman Hussan, Sharikat Ma'aden, Sustainability Manager. And my question actually is to bridge between this panel and the panel before. It's about the new trend in investment called the passive managed funds that managed through algorithms and computers. How this will change the governance and especially the reporting and the transparency when it comes to soft issues, if we call it soft issues like environmental things and social things and long-term risks, especially for industries like mining. Thank you.
Any preferences from the panel to take one or both questions?
I'll take the second question. At least it's related more to the exchanges. Sam? No, it's very much related. I'll open the space for the other panelists. I think I totally agree with you. Exchanges and investment in exchanges are taking, I would say, different directions as far as human intervention in the trades, and it's growing over and over. And I don't think it should be a change that the markets should take. It always has to be the same development speed or acceleration. So you have always to adapt the changes that happening in one side with the other side, whether it's regulatory or operational that covers governance or etc. So you will still have to live with the developments of how do you deal with algorithm trading, high frequency trading that are basically done by machines. I would say in that regard as well, these type of trades are still have human intervention because these trades comes by human decisions on specific companies, and that's still based on financial outlooks, financial performance, governance, structure. But I don't think the case will be linking it to the panel, the previous panel. It's going to be the case in 5 or 10 years. Yeah. So with the era of fintech these days and blockchain, everything would evolve from my perspective to adopt or to co-op with these changes.
I'll just comment on the active to passive shift in the industry, because that is also shining a light on the the issues that we're discussing here today at this conference, which is, the governance and the social and the environmental issues. Those are the institutions that influence companies and really push for these types of changes. And they are leading the charge in many ways in the way that they are acting with companies. And so they become somewhat activist in some cases, really pushing for positive change because they are long-term investors. And so I think it's really important to understand the dynamics that are happening with respect to the shift from active to passive and what it really means for companies and the increasing importance of the topics that have been addressed at this conference here today. So I just want to point that out because I'm getting more and more calls from passive investors. Interesting, right? Because you'd think, well, gee, they have to invest because we're a percentage of against a benchmark, and there's a percentage in the financial sector and a percentage they hold in BNY Mellon, but they are actually interested in delving into some of the issues we've been discussing today with respect to board composition, aligning pay with performance of executives, board diversity in all of its forms, climate change, and what are we doing to be socially responsible, and are we acting in the best long-term interests of shareholders, and is management truly aligned? And so it goes back to the discussion that we've had about values. They're very interested in values and how the values of the management team is aligned with the values of our investors who are focused on the right things. And so that's a really important trend. And I know that the number of assets on a percentage basis has been increasing with respect to passive, and I think it's still under a third of the market in terms of total assets. But the passive component of global assets is expected to double in the next about 7 years. So that's something to really focus on, and that's why this conversation that we're all having here today is so critically important to every company, whether private or public here in the local market, looking to expand beyond the borders and compete in a global marketplace.
Thank you so much, Valerie. I think that perhaps in the interest of time, we'll try to wrap up this panel. And I think there are lots of side conversations that are to be had on algorithmic trading, on the passive versus active, which is in fact a daily conversation in the FT that we can all follow. But I'd like to thank our esteemed panelists, and perhaps just to conclude, go to the last voting question to leave you with some food for thought as this conference is drawing to an end. So if we can have the last voting question for this panel, please. So how active should Gulf businesses be in generating social impact in the region? If we can have 1 minute to think about that. And I think that as we draw to an end of this conference, that will be one of the sort of parting thoughts as to the responsibility of C-suites and board members in sort of driving corporate governance change vis-a-vis, as we've been discussing, the regulators and the exchanges. So thank you very much for spending the last hour with this panel. I just want to wait till the... Well, at least I think this is the panel where we've had most consensus over the last 4 or 5 panels that we've had so far. So hopefully that indicates there is a consensus going forward that this is a joint responsibility that businesses in the region must own. And I'm sure that will be a conversation that will be pursued in future Pearl Initiative and Aramco forums. So I think I'd like to first of all thank very much our esteemed panelists for their views and their time, and thank you for the courage to stay with us until the very end. I don't know if there are any further announcements that the team would like to make, but thank you.
Thank you very much. Thank you very much to our panelists and our moderator. May I kindly request Mr. Amin Nasser and Mr. Badr Jafar to the stage to present our panelists with a token of appreciation. Ladies and gentlemen, this concludes our panels for this evening or this afternoon. We will be wrapping up with the closing remarks of this forum. And I'd like to invite to the stage Mrs. Carla Koffel, who will be addressing the closing remarks.